Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'll be guiding you through the latest news and trends that affect your financial well-being. Today, we're starting with a look at two companies that are making big moves in the tech industry. First up, Dell Technologies is seeing a significant surge in its stock price after announcing plans to double its capital expenditure on artificial intelligence infrastructure. The company's shares jumped over 21% following the news, as investors bet on the potential for long-term growth in the AI sector. However, not all companies are faring as well. CoreWeave, a cloud infrastructure provider, saw its stock price slump by around 15% after announcing plans to double its capital expenditure this year. The move has sparked concerns about margin pressure and effective returns from its artificial intelligence push. It's clear that the tech industry is undergoing a significant shift, with companies investing heavily in AI infrastructure to stay ahead of the curve. But as we've seen with CoreWeave, this investment comes with risks, and investors are watching closely to see how these companies will manage their spending and generate returns. We'll be keeping a close eye on these developments and bringing you updates as more information becomes available. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of investing in finance, where market volatility can be a major concern for investors. National Bank Capital Markets has updated its list of preferred dividend payers for the first half of 2026, which could provide some relief for those looking to navigate uncertain economic times. The list includes 23 companies with an average yield of 4.8% and an average payout ratio of 62.8%. Some of the top companies on the list include Automotive Properties, REIT with a yield of 7.2%, Alaris Equity Partners Income Trust at 6.6%, Gibson Energy Inc. at 6.1%, Ryokan REIT at 5.9%, and Crombie REIT at 5.6%. It's worth noting that, in the second half of last year, National's list returned 25.4%. outperforming the S&P/TSX Composite. Additionally, we've seen several price target hikes from analysts, including National Bank Capital Markets analyst Dan Payne, hiking his price target for Trican Well Services Lipti to 8 from 650, and CIBC Capital Markets analysts, led by Anita Soni, hiking their price target for Equinox Gold Corp to 32 from 2650. It's essential for investors to do their research and consider multiple perspectives before making any investment decisions. While dividend-paying stocks can provide a relatively stable source of income, it's crucial to evaluate the company's financial health, growth prospects, and industry trends. As we continue to navigate the complex world of investing, it's more important than ever to stay informed and adapt to changing market conditions. Welcome back to the closing segment of the Riskwiser Zone. As we wrap up today's discussion on market trends and analysis, let's take a look at what's been making headlines in the world of tech and finance. NVIDIA, the giant in the field of graphics processing units, GPUs, and artificial intelligence (AI) solutions, has just released its quarterly earnings report, and the results are nothing short of spectacular. With a jump in profit and record revenue, one would expect the market to respond positively, but instead, shares of NVIDIA fell by 5.5% on Thursday afternoon. This significant drop, the largest since April, raises interesting questions about market sentiment and the ongoing debate about an AI bubble. The earnings report from NVIDIA showed that the company is indeed benefiting from the surge in demand for AI infrastructure, with predictions of another record quarter ahead. However, despite this rosy outlook, investors seem to be harboring concerns about the sustainability of this growth, particularly in light of valuations that some might argue are getting a bit too rich. The forward price-to-earnings ratio, while still in the low 20s, suggests that Nvidia's stock might be considered reasonably valued compared to its peers and the broader market, especially given its position as a leader in the booming AI sector. It's also worth noting how other players in the semiconductor industry, such as Advanced Micro Devices (AMD) and Intel (INTC), have been affected by these trends. Both saw their shares decline, reflecting a broader pressure on AI chipmakers and potentially signaling a period of consolidation or adjustment in investor expectations. For investors looking to navigate these complex waters, it's essential to keep a level head and remember that market volatility is a natural part of the investment journey. The question of whether to buy into Nvidia or similar stocks right now depends on your individual financial goals, risk tolerance, and investment horizon. As always, doing your own research and possibly consulting with a financial advisor can provide personalized guidance tailored to your needs. In conclusion, the story of Nvidia's recent earnings report and its impact on the market serves as a reminder of the dynamic nature of the tech industry and the importance of staying informed but not reactionary. As we close out today's episode of the Riskwiser Zone, remember that investing is a long-term game, and it's crucial to keep your eyes on the horizon while navigating the inevitable ups and downs of the market. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.